What's going on, guys? I'm in a day trader's account since they've launched Project X, so a little bit of an early evaluation here of it. Doing an evaluation, currently up 12 points on this 20 SMA short here. Again, you've got my stop loss box here, stop loss above previous candle. We're up 25, 27 points, guys. I'm just going to go ahead and sell this position here. Up 30 points and 33, 37, 45 points. Beautiful trade. Wish I had more size on it. We're just going to lock out there at 42 points as we come into VWAP here. So the reason why I wanted to hit the record button here and started to, kind of outline this trade, let's get this the hell off the screen, is we've got to really start to study and we've got to start trusting technical analysis. We've got to start trusting the strategies that we use. And we've really got to start analyzing these trades in real time. Okay. So when the market starts to heat up, when the market starts to heat up and the bell opens, price is going up, it's going down. We've got some levels, we've got some strategies. We just get lost, right? We get lost. We've got to simplify things. We have to understand that once we put on a trade, the trade's in motion. Okay, the outcome out of our control. Now, putting these boxes, right? This is just a box that I drew, kind of gives me a visual. So what I'm looking at here is price, kind of really gravitated away from this VWAP. We got extended for a period of time above the 20 SMA. Price action consolidated sideways, put in a high at 21,935. Price action lost the 20 SMA. So first thing that I'm drawing my eyes to is there's a gap between the 20 SMA down to VWAP. Okay. As soon as we close below the 20 SMA, I just drag my little box. I put it just like such. Okay. This is my stop loss. This is my stop loss because I am looking to exit this trade if it bounces and it closes outside of the candle that closed below the 20 SMA. Does that make sense? So in this particular scenario, right, let's say this bounces and it stays in here and it stays in here. Let's say it wicks up here and it comes back down and it stays in here. Let's say there's 20 minutes that pass by and we're still trading below the zone. I need to hold that position, right? But what I think that we need to do and what we need to start analyzing is before you put on the trade, you need to assess the risk. Okay, you need to assess the risk. So in this particular case, if I was to put a stop loss, if I was to get out of this trade above my reason why candle, I'm giving up a minimum of 33 points. A minimum of 33 points. Can I knock that down a little bit? Sure. Maybe I need to get into a smaller time frame. I like the 5-minute time frame. So I have to work around this 33 points because technically my trade is not invalidated until it closes back over that reason why candle. Okay. So in that type of situation, for let's call it 30 points. 30 points for 1 micro, I'm going to lose $60. If I was trading 2 contracts, that's $120. If I was trading 3 contracts, it's $180. So you have to know, based on your account, based on your drawdown, based on the account size, how much do you want to lose per trade? Do you want to give up 60 points? Then I'm here to inform you that you can only play 1 micro. I don't really care if you don't like that you're only going to make $20 or $30 or $40 or $50 a trade. I don't really care. It doesn't really matter. If you are willing to give up $125 and you're okay with taking profits at $50, $80, $100, then play 2 micros. If you're not happy with that, I don't really care, right? And I'm not saying this to be, harsh. I'm saying it because it's the facts. And I think a lot of times we get into trades with expectations that we're going to get a full 20 points. We're going to get a full 50 points. We're going to catch, a bunch of money. We're going to risk a little bit of amount. But we've got to start looking at these setups and we've got to start just letting the trade go. Letting the trade go to profit. Letting the trade go to stop loss. And we need to have the emotions in check. Meaning, if the trade loses, guys. There's Nothing we can do about it. Now, you can definitely have 10, 20, 30, 40, 50 accounts, and you can take a separate or individual trade on each of those accounts. So if you're someone who likes to take 10 trades a day, then I'm going to say minimum you want 10 accounts, right? If you're someone who takes 5 trades a day, then I'm going to say minimum 5 accounts. You know, if you want to copy trade and you take an average of 5 trades a day, then I would recommend a minimum of 10 accounts. That way you can copy trade in groups of 2. So start figuring those kind of numbers out for yourself. Stop getting fixated on the singular account that you're trading at the particular time you enter the trade, and focus on letting the trade actually work out, and focus on how much risk is on the table before you're going to enter this trade. I knew that before I entered the trade on this evaluation, I'm going to give up at least $60. At least $60. And I was lucky enough that we had some momentum and I got 42 points. So I made $85 on one micro. On one micro. Okay? So those trades happen. There'll be times and situations where I don't make 40 points. I make 10 points. And that's a $20 to $25 a trade per individual micro that you're trading. So when you get into these trades, make sure that you're understanding where your stop loss is going to be. And if you need to draw these boxes, draw these zones on your chart, draw the zones on your chart, right? Maybe it'll help you, give you a visual that to get your eyes off of the P&L. Am I up? Am I down? Am I up? Am I down? You know, for me, I like to have, you know, sometimes I like to throw a hard take profit in there, right? For this evaluation, you know, I've got a very hard $250 a day max daily loss. It'll auto lock me out. That's why I love using the Project X platform. You can get it with daytraders.com right now. I think you can use my code DAnthony to get a discount. Supposedly it's going to roll out to the general public on Monday. It might already be out. I'm not sure. Top Step offers Project X. I think Bullnox offers Project X. You can set up a trade count, but this is not to promote the Project X. I don't really care what you guys trade. Just if you don't use Project X, that's fine, but just have yourself disciplined enough. So I'm just giving you guys my stats. $250 a day max loss. It'll lock me out of the account. And I got a hard take profit at $100. So I don't really care how many contracts I'm trading, whether I'm trading one contract, a micro, whether I'm trading 2 or 3 minis, it's going to just fill me at $100 in profit. I know that I take 3, 4, 5 trades a day. That's going to be $100, $200, $300, $400 a day. I'm comfortable stopping out at those levels. I can walk away. I feel comfortable walking away at $300 in profit. I feel comfortable walking away with $200 in profit. And then I just go to the drop-down menu and I go into another account if I see another trade. But we really need to start studying these 20 SMAs. I want to stay as much with respecting the amount of risk per trade based on that reason why candle. And I want to keep my take profits somewhere around the ATR. So if the ATR right now on a 5-minute time frame is 30 points, that's the max I'm looking to get. Okay, that's the max. But I have no problem taking 10. I have no problem taking 15 points. I have no problem taking 20 points. I just know that the max is 30 points. That's the ATR. If it wants to go down 100 points, great. Great. But as it's traveling en route to 30 points, I have no problem taking points along the way. So why did I make this video? I want to make this video to show you guys that when you get a setup, you need to analyze this risk. I think everyone needs to start drawing these zones, right? You need to start putting these boxes on your screen. And the reason why is because when you get into a trade and sometimes it's bouncing and it's dancing, right? It kind of wicks you in and it comes back up. We're getting stopped out prematurely a lot of the times. You know, we're trading way too much size and you're taking a full stop loss on a dollar amount because it bounced against you, and then you're watching it flush down here like it did and you would have made money, right? So before you get into the trade, you need to understand that, hey, this particular trade, we were giving up 33 points. So what's the math on 33 points, right? We're talking $60, $65 a micro. So how much money do you want to risk on one trade? Is it $100? You need to stay around 1 to 2 contracts. If it's $200, you need to stay around 3 to 4 contracts. You know, if it's $300, $400 you want to risk per day or per trade, then, you know, maybe you can trade 3 to 5 micros. You know, can you get lucky and throw on a mini and hope that it goes in your favor really quickly? Sure. But what about when it goes against you 25 points and you're in drawdown? Would you rather be down $50, $100, $150 on 1, 2, or 3 micros? Or would you want to be down $400, $500, $600, right? The choice is yours. I'll leave that up to you. That's your decision, what you want to do. But I think you need to start getting comfortable with trusting the setup and trusting your stop loss and trusting the price action and just trusting the strategy. We've got to stop bouncing around. I'm starting to see a lot of things where, you know, we've got all of these accounts and we're using all of these strategies. Why are we using so many strategies? Guys, many of you guys have been in this room for a month, 2 months, 3 months, some of you guys over a year. You guys know that I've been talking about the 20 SMA forever. Is it the only strategy that I play? No. I play a lot of different strategies, but there are a lot of strategies that I'm all playing on the same accounts, right? I'm not like designating the 20 SMA strategy to one account and a 30-minute opening range to another account. I'll take a 20 SMA and a 30-minute opening range on the same account. All I'm focusing on is respecting my daily loss limit and respecting my walk away profit target. That's it. Either I make money and I walk away, or I get stopped out at my daily loss limit and I walk away. Walking away for me means either getting into another account to trade future setups, or getting away means I'm leaving the computer screens and I'm not trading anymore. But I'm not trying to segregate, separate, test, and do all of this crazy stuff. I've done enough back testing. I feel that many of you guys in your strategies have done enough back testing. The back testing is over, guys. It's time to make money. So the only way you're going to make money is by forward testing and by showing up every single day and continuing to take the trades. But more importantly, respecting the daily loss limit, respecting your rules, this, that, and the other. So just wanted to give you guys an update there on a 20 SMA trade that worked for 40 points. Again, I didn't know if it was going to work or not. Could have definitely come to stop me out if it would have got outside my box. But that's what the box is there for, right? The reason why box is what we'll call it, or I'll just call it the stop loss box. You know, it doesn't really matter. But that zone, as long as price is staying under this zone, you know, I've got to hold it until I make money or until I get stopped out. And getting stopped out would be something like this. Boom. And then candle closes here. Okay. So that's it, guys. That's it. Hopefully you guys take something from that. Hopefully it helps you guys. But I'll see you guys in the room.